Welcome back to How FinTech Works by MEDICI Studios. I'm your host, Ling, and we're talking about cashless payments. In this episode, we're really going to cover some of the changes that it implies for banks as relates to systems. Now, the intriguing thing is when we talk about cashless, a lot of times people are only thinking about currency and what it means to not actually use physical cash. And that's kind of true for the banks. It's definitely beneficial to not have to carry a ton of currency, service your ATMs, and make sure that they're filled up with cash and a whole host of other things. But the real thing we're asking banks to do when we move to cashless in the modern age is we're asking them to move from the old way of doing things to real-time payments. So yes, there are all these other benefits of just not having to hold cash in custody, hold it somewhere in a vault and be worried about a bank heist. But the bigger deal is to have other financial transactions, all financial transactions, look a lot more like real-time exchanges. For example, if I go down the street and buy a burger with cash, which would be really hard because I'm in India and no one really takes cash anymore. But if I did that, then I would give the cash and that person would immediately have access to the money. They have the currency in their hand. But it's possible if they've been doing this all day that their next step is to just go to the bank and put it into deposit. But the most likely thing they'll do next is just go to the bank if they've got tons of cash so that they're not carrying it around like mad after a long day of selling burgers. They'll put it into the bank account into deposit. And that happens pretty instantaneously. Why does he even have to go to the bank anyway after a long, hard day of work? Why shouldn't he just be allowed to zing and it's magically in his account as it is for countries that have moved completely cashless? Well, it turns out that although when you deposit, the bank might credit you immediately, what actually happens in the background for things like checks or even things like credit cards is a different process. Now let's just talk about checks or bank-to-bank transfers. In order to make something like, if you're in the US, a Venmo, if you're in a country like India, UPI-related technologies, or if you're in China or the East, Alipay, WeChat, things that you might be familiar with, in order to make those work real time, you're actually saying that a bank has to get off of other processes. And one of the most common ones is ACH. ACH stands for Automated Clearinghouse, and this process has been in place for a very long time. You have experienced this if you've tried to cash a check, if your boss pays you in a check format. If you've had a bank tell you it's going to take 1 to 2 days to process your check, that's because of the way ACH works. And in wonderful, easy, simple cases, it's just 1 to 2 days. And sometimes if you're trying to cash a check from very far away, it might be 1 to 5 days. But in some countries, or if you're trying to move from country to country, that process can take a month. It is so frustrating because one person has already written the check in agreement that they will give you the money, and the other person is just waiting for this ridiculous amount of time to process the check. Imagine if you've already done a service for someone and you've now got to wait a month before you get paid. So frustrating. The new technology that exists replaces this. There is no real reason in 2020 that you should have to wait for a payment to go from point A to point B. Sounds amazing. But why would a bank not want to do this? Even on their perspective, they must feel bad if they're holding money. In the case that's in another currency from another country, it means that as they're holding this check relative to your account, interest rates are changing, currencies are shifting. Now, they may not be bearing that risk, but even then, as your bank, they ought to be doing this as a service in a lot of ways for your account. Very frustrating. Well, it turns out that banks are conservative in nature, and they are trying to, in many cases, be protective of their clients. The first thing to really note, ACH has been around for a really long time. Even in the case where you're waiting a month, banks know how it works. They know what the other side is going to do necessarily, and they're aware of the infrastructure that exists with the various countries that they're working with. Even when a bank is sending to a country it's never sent to before, that first check might take X amount of time. But the second one typically is shorter because they've learned each other's process. Real-time payments does in many ways require that both nations, both countries have already established a certain type of technological standard. And that can be a little scary to think about how that might transpire. Similarly, on day-to-day transactions, it may be the case that the bank has built all kinds of processes, checks and balances, things that they feel really protect their clients that might really require almost a transition period. This is like all things within a company. For example, when your tech team is trying to upgrade the software, there's always a period of testing and making sure everyone is safe and no one's software gets cut off. That kind of fear for some banks, particularly larger banks, is a legitimate concern that is trying to be worked through. In a third case, this may relate to fees that the bank actually does receive for ACH transactions, for wire transfers, for different things. If it's a big part of the business, maybe they're sensitive to what it means to move the business away from this area. All of these things are real considerations for banks. And, in a lot of developed markets, it works. So why fix it? It would be a really scary thing. The reason to fix it is really a competitive one. There are a lot of companies that are seeing this problem and finding technology solutions to just address these issues. The reason to address it is because financial technology, FinTech companies are coming up all the time to close the gap of this process. There's no reason, as I said, in 2020, from a data perspective, that you should have to wait if you're just doing a regular everyday payment. The need to write checks, it's changing. It really is more a habit that someone has than a real financial need. And people want their money right away. Apps like Alipay, apps like WeChat in Asia, the UPI system in India, in the US, companies like Venmo, they are changing the landscape and allowing fast payments, real-time payments for services or for goods. And that is just the preference of the consumer. As a result, banks are responding and banks are continuing to move and figure out how they can become modernized. How long will it take the banks? Well, they are moving very quickly. I think a lot of it goes back to our earlier video. It really comes down to value proposition. And for a lot of the countries, India and China, that have moved quickly, the value proposition was easy because it was relative to physical cash. But in the developed markets, the value proposition also has to compete with credit cards, and credit cards are simple and easy to use. In the developed markets, the value proposition is not just a competition with cash. As we said in the earlier video, you also have to compete with credit cards. And if you're going to compete with credit cards, you have to understand that the credit card is not as easy an opponent as cash. It's actually doing a lot more. And we're going to talk about that in the next video. So stay tuned.